All right, everyone. How's everyone doing? Good? Good, perfect, awesome. Yes, supporters. Beautiful. My name is Raja. I'm a trader first, and then I'm a founder of Dominion Markets, leading innovation. Also, we launched a prop firm called Dominion Funding. We have an MT5 simulator with all platforms with this. So what I'm going to do is I'm not going to tell you which indicators to trade. I'm not going to tell you which strategy to trade, but I'm just going to cut through all the bullshit, and I'm going to show you exactly how I created a trading plan and something that you can use for yourself as well. Now, what's the first thing we hear when we learn about Forex trading? The first thing we hear is that it's a $5.26 trillion market. It's open 24 hours a day, 5 days a week. You can trade at any time in the day and make money. That's the first 3-4 things we hear about when we say, okay, I'm going to start to learn Forex trading. But the reality is, you have to choose what time suits you best. Like a lot of us, what we do is we get so amped up and we get so excited to trade that we're like, okay, you know what? I'm going to take a trade first thing I wake up. And then I'm going to go to the grocery store with my wife or whatever. And then I'm going to be trading while at the grocery store. I'm going to be trading while at the gym. I've traded at the gym. Who else here has traded at the gym? Perfect. And most of the time, they're all losing trades. We've never won a trade at the gym, right? Because the reason why is we don't know what time to trade. Because let's take a look at this, right? What time suits my lifestyle? When I first started trading back in Canada, and I understood that the only time I have free of all distraction from my wife, my kids, parents, and everything, is the morning time. I knew that if I can dedicate my time from 5 a.m. to 8 a.m., that's the time I have to trade. I cannot trade in the afternoon because I'm busy with work. I can't trade in the evening time because I'm busy with family, right? Even though markets are moving at that time, even though my friends are trading at that time, but I have to respect the time I can trade. So I chose the morning time, 5 a.m. to 8 a.m. So that's something you have to do as well, right? When you go home, look at your life, and if you're losing, which is 90% is the fact we're all going to lose, right? But look at your life and ask yourself, what time do you have free? Then look to see what session is that time. When I first started from 5 a.m. to 8 a.m., the session that fell during that time was the New York session. So I'm like, okay, bet. I'm only going to focus on the New York session because that's the only time I have, right? Next, you need to see that the time you're choosing, is there enough volume in that time or not, right? So let's say if you choose, let's say, London Open. You're choosing London Open, but let me tell you a very important thing about sessions, right? Every session, it moves the same way, month over month, week over week. The reason why a lot of us, we cannot identify patterns that repeat themselves is because we're so distracted by different sessions. Because when I first started, I was trading in the New York session. I was like, okay, perfect, I was profitable. Then I started trading the London session. Then I started trading the Asian session. What happened to my profitability? It took a nosedive. Because I was profitable during the New York session. Asian session, I was distracted, I was trading, I was losing. London session was in the middle of the night at 2 a.m. I was waking up and my wife is sitting right there and she would ask me, what are you doing at 2 a.m.? I'm like, oh no, I have to go trade and make money, you know? And then now when I look back, it didn't make any sense, you know, because there was no rhyme or rhythm to that. So I chose the New York session. I knew that during the time I'm chosen, there is a lot of volume at that time. So I can trade and then have to understand, okay, what news events are at that time? Asian session, few news events, London session, whatever we know. Now, when you have chosen the time to trade, and when you have chosen what session you're going to trade, next you have to take a look at what pairs are active in that session. Like, so we have a community of about 5,000 members in our online education, and sometimes guys say that, hey man, I'm going to trade the New York session, but can I trade Australian dollar yen in the New York session? And then I asked them, okay, if you're going to trade AUD JPY in the New York session, is Australian dollar open in the New York session? Yes or no? No, exactly no. And then I asked, is yen open in New York session? They're like, no. Then why are you focusing on AUD JPY in the New York session, right? So you have to choose that which pairs are open in New York session. Like let's say if you're going to choose London session, my favorite pair to trade in the London session is either gold or pound yen. Because I know in the London session, pound has a lot of volume, a lot of volatility, so the pair pound yen is going to move. But if I make a mistake of trading AUD JPY in the London session, there's a very high probability I'm going to lose. And then someone's going to say, well, why are you trading AUD JPY like a retard in London session when the whole pair is closed? Doesn't make any sense. Next, spreads. Obviously, anything below 2 pips is amazing. Next is, if you're choosing a pair, have you spent enough time watching that pair? Right? Let's say, for example, someone looks at someone making, hundreds and thousands of dollars in gold, and they've never traded gold. Now they're going to say, okay, like, you know what? That person made money on Instagram on gold, and now I'm going to start trading gold. And when you start trading gold, what happens? You start losing it. You're like, man, what the hell's happening over here? Right? So the thing is, have you spent enough time watching that pair? Because let me break this down to you. If you're choosing gold, gold will have a different personality the way it moves in the London session versus in New York session and versus in the Asian session. Different instruments, right, across different sessions. It's like the same thing. When you make a new friend in the gym, right? When you make a new friend in the gym, you know that this person is going to come in the morning to the gym. He has a different personality, right? But if you want to say to him, hey man, let's hang out in the evening time, he's going to say, no, I'm busy in the evening time, I can't hang out. So that's the thing. Just like us people, every currency pair has a different personality in every session, which is why it's very important. Have you watched that currency pair enough? So I say, like, the best way to do that is to watch a pair for about, I'd say like 2 months, 2 to 3 months. And then you're going to start to understand the patterns. Like what we're watching at gold right now is something I've seen back in 2018 and 2017 when this trade wars were happening at that time too. So now when I see that, I'm like, oh, this is deja vu. I've seen this happen. I spent 8 years watching gold, so now whatever happened on gold, I can understand that, okay, you know what, I understand what's happening, I know where the volatility is, I know where the volume is, what risk to use, so these things help. And man, please, stop looking at more than 2 pairs. You don't have to look at more than 2 pairs. Doesn't make any sense. I know you guys sometimes feel that, oh, you know what, if I look at 6 pairs, I'll make a lot of money and it's good, life's going to be great, I'll retire my family and all this, but those dreams are true, but dreams are always dreams. Let's stick to reality. Reality is 1 or 2 pairs with discipline. That's it. Next, we're looking at risk management, right? Who sucks at risk management? If you're like, come on, let's get real. We're all not making millions at the same time. So risk management. Risk management is not about knowing what your risk reward is, right? When I first started trading, I was told that to have a profitable risk reward, it has to be 1 to 3, or 1 to 5, or 1 to 10. And I'm like, oh wow. So if I can risk $2, then I can make $10 with the 1 to 5 risk reward. But you know what happened in the beginning? I'll tell you what happened. I started to trade 1 to 3, 1 to 4 risk reward. And what I realized was that 90% of the time, my position is going to go in profit to about 1 to 1. Then it will retrace, go in drawdown. Then I'm going to remove my stop loss. And then my account is going to be jeopardized. That's what I'm, so if you guys look at your trading history, what you're going to find out is exactly the same thing. What I tell my guys is this, like, look at the last 40 trades or 50 trades you're taken, and I can 100% guarantee you, you will find out that most of the time, it will always go in 1 to 1 profit, risk reward, 1 to 1. And that's your point to secure something and leave the rest running. Because it's not every day you're going to get 1 to 5 or 1 to 10. 1 to 10 is like a unicorn move. Like, let's say with gold, if you took a buy last night in Asian session, you got like what, 1 to 40, but that does not happen every day. Dynamic or static risk. This is something very, very important. And the reason why this is important is it goes in so much detail, but I don't have enough time. Dynamic risk is, so let's say, for example, I'm trading a $1,000 account, right? And I'm going to say, okay, you know what, Raja, I'm going to use a 50-cent lot. If I'm going to use a 50-cent lot, I can cut that down into 5 different positions on 10 cents, 10 cents, 10 cents, and so on. So that's dynamic risk, where you are managing a risk before you even enter the trade. How many trades will you take in a day? Me, personally, when I was losing consistently, I wasn't proud of that, but I wanted to make my family rich. I was taking more than 5 trades a day. I was taking 10 trades, 10, 11, 12 trades. And you know when they say that, oh, you know, whatever trade you take, you have to journal your trade. When you're taking 10 trades, you're not journaling 10 trades. By the 3rd and the 4th trade, you're getting so embarrassed looking at all your losses, you're like, ah, screw this, let's move on to the next day, right? But when you're focusing on 1 or 2 trades, it's extremely easy to journal those trades, really easy. And that's one change you guys have to make. What's your monthly or weekly goal, and what do I cut my loss of and secure rent? Okay, having monthly, weekly, and daily goals, I'm highly against it. And I'm going to tell you why. Because in the beginning, when you come into trading, you're like, okay, you know what, my monthly goal is 10% or 5 or whatever. But if your goal is, let's say, 10% a month, and you're sitting at 9%, and you got 2-3 days left for the month to end, now you're going to be pressurized to make that goal. As a new trader, when you're pressurized to meet that goal, there's a 100% probability you're never going to reach that goal. Okay, so there was a time when my account was at $9,980, you know? So I wanted a cool 10,000 number over there. You know, how many times you've seen that? A cool 10,000. For me to chase that $20 to get to 10,000, I ended my day at 8,500 and something. Like I lost more than what I wanted to win because I had a goal in my mind, right? So I say this, like, instead of having a set percentage goal, aim to have a winning trade. That's it. Aim to have a winning trade. If you can have a winning trade, you can replicate that trade the next day or the next week or the next month. But if you have this goal that, oh, have to reach 10%, 15%, 5%, whatever, you're going to exhaust yourself. You know how many times you sit down to trade and you're reaching for your goal, and by the time the trading day is ended, you're like, man, I'm so tired because I've exerted mentally so much on the chart. This happens to us, right? This happens to us. I remember it used to happen to me too. I used to look at 10 pairs and I used to look at 3 sessions. I would overexhaust myself and I would make no money at all. Even though my wife thought we were making money, but we were actually losing money. But now it's a different story. All right, risk management. What time frames will I focus on? This is the most important thing. You know, a lot of time guys say, oh, you know what, I scalped the 1-minute chart, I scalped the 5-minute chart, but then you have to ask yourself that how many times have you really consistently won on the 1-minute chart or on the 5-minute chart? What I do is, I cannot tell you what to do, but I can only tell you what I do. You know, I focus on the 1 hour and the 30-minute, that's it. I look at confirmations on the 30-minute chart, the 30-minute candles, 15 minutes sometimes, mostly it's the 30-minute and the 1 hour. And the amount of pips I focus on is like 10 to 15 pips, that's it. 10, 15 pips, I'm done. I don't care where the market goes after that, I call it a day. Technical analysis, is there a valid support or resistance formed? Do you have enough range for price to move? This is another good one, right? A lot of times we see a potential buy happening and we want to execute that buy position, but then when we realize that, okay, the resistance is right there, 4 or 5 pips away, and then you're so lost in your analysis, you're like, okay, if I take a buy, I hope that this resistance gets broken, or I hope the support breaks. You know, hope is not gonna work, you know? So if I could show you the charts, but since time is of the essence, has the candle closed in my direction? This is a really number one, right? So let's say, for example, you're looking at the chart and you have a bullish candle printed, and now you want to take a sell. A candle has closed bullish, you take a sell, and now you're hoping that the candle goes bearish. I've done that a lot of times, because if I think if I'm going to take a sell, I hope the sell comes on a wick and I can have a nice clean entry. But the thing is, my mentor told me back then, maybe like 7, 8 years ago, he's like, Raja, listen, if you can just have one candle closing in your favor on the 30-minute time frame, that will justify your entire trading idea. You know, it's the same thing as if all the buses are going left, right, and you want to go right. Are you going to jump on the bus that goes left and, well, I hope we turn right one day? No, you're going to wait for the bus that goes right. So when I looked at the analogy, I'm like, okay, this makes perfect sense. If I'm looking for a buy, at least I have to wait for a candle to close bullish. So someone can ask me, Raja, why do you take this losing trade? Oh, I took this because the candle closed in my favor, right? But if a candle closes against me and I'm hoping it goes in my favor, there's no justification to that. You know, they'd be like, well, why'd you take the trade when the candle wasn't in your favor, right? So you got to approach trading in that manner. Trade management. Am I comfortable with my gains? This is the biggest thing. Did you guys know that, okay, so I run a brokerage, Dominion Markets. We also fund traders with Dominion funding. We've seen that 90% of our traders, their first and the second trade, they're winning trades. Winning trades. Whether that's a $10,000 win or a $1 win, it's a winning trade. It's what they do after the winning trade is what matters, right? A lot of times you're going to have guys that they will have a $2 win, and for them the $2 win is not going to be enough. But you guys forget that if you have a $2 win, you are doing better than the 90% people who are losing, even with that $2 win. So you got to be happy with those $2 win. I am okay. So I trade on a $600,000 account, right? Some days I end my days with a $20 win or a $100 win. And when we do live streams, guys tell me, hey, you only made $20 on your six-figure account. I'm like, that's fine. Tomorrow we can make 2,000 or 5,000. But that's the thing. Are you comfortable with what you're making? And what I say what you're making is, are you comfortable with the positive you have in your account? That's the most important thing. So if you can end your day with like a $10 win, be grateful. Be like, okay, you know what? I came to the markets. I fought the markets. I fought other traders. I fought institutions and algorithms, and I'm profitable. Even if that's a $2 profit, I'm profitable. I came, I fought, and I won. But if you keep on fighting for that extra $2, $3 more, you're going to end up losing the profits, and you're going to end up losing some of your balance too. You know, we've all been through that. And sometimes we're so embarrassed to even accept our losses, we just start a new account. You know? We're going to have this one account with losses, and then we're going to, okay, yeah, let's start a fresh account, fresh beginnings, but the same bullshit discipline. It doesn't help. You know, so we have to change our mindset. Should I close partials and the loss? The number one thing that helped me to make sure my losses were smaller is because I knew that if I can close my loss before it hits stop loss, that's way better. Because a lot of time what happens is, when our trades go in losses, what's the first thing that comes to our mind? I hope it's going to turn around. And the second thing what we do is either we extend our stop loss or we remove the stop loss, right? I used to do that. And then my losses got bigger and bigger. But what I found out was that, okay, intuitively, whenever price comes for a stop loss, can you feel it's going to hit your stop loss? Sometimes I can feel it's going to hit my stop loss. Like a lot of times we can feel it's going to hit the stop loss. So when I feel it's going to hit the stop loss, I close that trade by 50%. So if I'm risking $100, I'm closing 50% at the time where it's going to hit my stop loss. If I do take a loss, I'm losing $70 or $80. Now I've lost less than what I planned on losing. And the more you practice, better you get with this. Do I have a runner break even? How do I journal? My journaling trades is so easy. You take screenshots before the analysis and after the analysis and just see what happens. That's it. That's the best way to journal the trades. There's no other way. I don't use any fancy software. I don't use any fancy indicators or nothing. It's just simple, clean price action, right? So a lot of you guys didn't take notes, but let's do a revision. How to make a trading plan is to choose the time that you're going to trade. What time are you going to trade? Are you trading Asian session, London session, New York session? Choose your time. Next, choose which session falls in that time. Let's say, for example, if you got the Asian session that falls in that time, bet you're like, okay, I'm an Asian session trader because Asian session falls in a time when I have free time. Don't let the market dictate when you should trade. You should dictate when you should trade. You know, a lot of time guys say, hey, Raja, we're going to have FOMC later on in the night. Are you going to trade FOMC? I'm like, no, I'm having family time. You know, I trade in the morning. You know, next, you have to choose the pair. What pair are you going to trade? Don't choose pairs that are not active in the market. Choose the pair that's actively open in that market. Asian session, pound yen amazing. Australian dollar yen amazing. USD yen, euro yen, amazing pairs. USD CAD in the Asian session? I don't think so. I don't think so. Pound USD? No idea. Not at all. You got the time, you got the session, you got the pairs, and then you have to decide what sort of a risk are you going to use. Are you going to use static risk, dynamic risk, technical analysis, trade management? I only use candlesticks, simple, clean price action. I don't complicate anything. Because here's the thing, when I first came into trading, I came from a university background. I dropped out later on anyway, but what I realized is that, okay, to make money in the markets, it has to be very, very complicated. You have to read all these indicators and these books and all this stuff, and then you're going to be able to make money from the markets. But what I realize is, if you keep it stupid simple, it will work in the end. It's not rocket science, you know. We're all very simple human beings, and we understand concepts when they're delivered to us in a very simplified manner. You know, everything that I've totally understood has been explained to me like how you would explain a concept to a 5-year-old. If you complicate that, it's going to be an uphill battle, you know. So I thank you everyone for coming down, and thank you Fastball for giving me the opportunity. Give yourselves a round of applause, and hopefully we all can make a trading plan and hopefully see some profitable days.